At the same time, this is also the Consumer Electronics Show. We'll hear about gaming probably. We'll probably hear about automotive. We'll probably hear, like as you mentioned, rumors maybe that they're pushing into the PC space. We'll probably hear a lot about robotics and AI at the edge. I think he's got plenty to talk about and plenty for people, I think, still to be excited about.
Are you looking for investments that could define the future of technology and energy? Do you wonder how to capitalize on the next wave of innovation while staying ahead of market trends? AI is no longer just science fiction. It's reshaping industries, powering breakthroughs, and even changing how we live our daily lives. But have you considered what fuels AI? Here's the key. AI is hungry for energy, and nuclear energy might just be the answer. Could this be the opportunity to align your investments with the future of technology? Let's explore. In today's world, artificial intelligence is no longer just an advantage. It's a necessity. Businesses that fail to adapt to AI risk falling behind, and for many, it's becoming a question of survival. AI is transforming everything from how we work and shop to how we innovate and compete. It's the engine of progress, driving businesses into the future. But here's the twist. Even AI needs its own lifeblood. Without a critical, yet often overlooked sector, AI's revolution wouldn't just slow down. It might never achieve its full potential. And that sector is energy, specifically nuclear energy. Here's why. The energy demands of AI are skyrocketing. As businesses invest billions to power data centers that can run massive AI models, we're talking about electricity consumption on the scale of entire cities, pushing the limits of what renewable energy sources can reliably provide. That's where nuclear energy steps in, efficient, sustainable, and crucially, always on. Big tech isn't just aware of this. They're making bold moves. Companies like Google, Amazon, and Microsoft are already pouring millions into nuclear projects to ensure AI's unstoppable rise. Amazon, for example, is investing in small modular nuclear reactors, while Google and Microsoft are striking deals to power their operations with carbon-free nuclear energy. And here's the opportunity for you. Just as businesses investing in AI saw massive returns, the companies driving the nuclear energy revolution stand to benefit immensely as well. With projections of soaring energy demand and tech giants leading the charge, 2025 could be a breakout year for nuclear energy stocks tied to AI's growth. In today's video, we'll uncover 3 nuclear energy stocks that are poised to ride this wave of innovation and could be the next big thing. If you're looking to position yourself ahead of this massive trend, these are the stocks you need to know about. Let's dive into the first stock on our list. Energy Fuels Incorporation, ticker UU. This is a company at the crossroads of innovation and opportunity, poised to make a huge impact in the uranium and critical mineral space. In 2025 and beyond, it could shine brighter than ever. Energy Fuels is often misunderstood, but that's where opportunity lies. This isn't just a uranium miner, it's a critical minerals powerhouse. The company owns the only operational uranium mill in the US, the White Mesa Mill in Utah, giving it a strategic edge as the nuclear energy sector gears up for massive growth, driven in part by AI's energy demands. With the US Department of Energy projecting a tripling of nuclear capacity by 2050, Energy Fuels is positioned to play a pivotal role in meeting this demand. In 2025, Energy Fuels plans to ramp up uranium production to 1.1 to 1.4 million pounds annually, with long-term goals of producing up to 5 million pounds per year. This aligns perfectly with the growing demand for uranium from AI-powered data centers and the global push toward clean energy. But there's more. Energy Fuels is diversifying into rare earth elements like neodymium and praseodymium, critical for the production of EV motors and wind turbines. Its RE initiative, backed by a $19 million investment, positions the company as a future leader in critical minerals, capable of producing enough REEs for 4 to 6 million EVs annually by the end of the decade. With no debt and a robust $183 million in working capital, Energy Fuels is financially stable, allowing it to fund growth initiatives without dilution. It's also taking advantage of high uranium spot prices, securing long-term contracts that could generate $210 million in gross profit. As the nuclear renaissance unfolds and big tech's energy needs soar, Energy Fuels is positioned as a major player. For investors looking to ride the nuclear and AI synergy, Energy Fuels offers tremendous upside potential. This is one stock you don't want to overlook. But before we proceed, here's something to think about. With AI pushing energy demand to record levels, do you think nuclear energy is the best long-term solution to power this tech revolution? Comment your thoughts below. Before we dive back in, I have an exciting update to share. Over the past months, we've recommended multiple stocks that have seen remarkable gains, rewarding both our YouTube viewers and private Discord members handsomely. For instance, we highlighted IonQ when it was trading near $10, and today it's hovering around $40. We covered AppLovin at $75, and it recently soared to the $400 level. MicroStrategy? We called it at $13, and it's now sitting comfortably near $400. And that's not all. Our timely picks on SoFi, Energy Fuels, aka Brands, TSM, and others have delivered impressive 2x to 5x returns for those who took action on our insights. The results speak for themselves. And if you missed out, here's your chance to stay ahead of the game. By joining our private Discord through Patreon, you'll gain access to timely buy and sell alerts, in-depth market analysis, and a thriving community of over 1,000 active investors. Plus, you'll be among the first to know about our upcoming penny stock pick with a potential 300% upside. Joining us not only keeps you informed during market hours, but also gives you direct access to discussions on critical market moves. The link to join is in the description below, and your support is greatly appreciated. Next on our list is Talon Energy Corporation, ticker TLN. A true comeback story that's capturing the nuclear energy spotlight and proving why it's a prime beneficiary of the AI-driven energy boom. Talon Energy has had an incredible 2024, with its stock soaring over 200% year-to-date, despite facing challenges like the rejection of its high-profile deal with Amazon Web Services, AWS. But here's the kicker. This stock's rise isn't just about one deal. It's about a company that has completely transformed itself and is positioned to ride the nuclear energy wave. Post-bankruptcy, Talon has emerged stronger than ever, boasting a significantly deleveraged balance sheet. In 2023, it reported an all-time high adjusted EBITDA of $1.1 billion. While 2024's earnings are slightly lower due to asset sales, the company projects a 37% increase in EBITDA for 2025. The kicker? Talon anticipates a 23% rise in net income next year, signaling a robust growth trajectory. But the real magic lies in Talon's strategic positioning. It owns the Susquehanna Steam Electric Station, a major nuclear power plant that's already attracting interest from tech giants like Amazon. Despite the setback on AWS's data center project, Talon continues to generate significant revenues through its power supply agreements and is tapping into the explosive demand for carbon-free energy from AI data centers. Adding fuel to the fire, Talon's aggressive share buyback program, worth $952 million so far, with plans for $1.2 billion more by 2026, is boosting investor confidence. And with forward PE ratios expected to drop to just 8.5 times by 2028, Talon looks incredibly undervalued compared to its nuclear energy peers. As the nuclear energy sector gains momentum and big tech pours billions into sustainable power, Talon Energy stands out as a leader with massive upside potential. If 2024 was this impressive, imagine what 2025 could bring for this rising star in nuclear energy. Finally, let's talk about the third stock on our list. Vistra Corporation, ticker VST. A utility stock that's proving why it's a top contender in the nuclear energy revolution. If Talon Energy is the comeback story, Vistra is the power play that's redefining the utility landscape. Vistra has had an incredible run, with its stock up a staggering 260% year-to-date, making it one of the best-performing companies in the S&P 500. What's driving this success? A powerful combination of strategic investments, diverse energy assets, and the booming demand for electricity fueled by AI and data centers. Vistra operates in deregulated markets like Texas and the Mid-Atlantic, which allows it to capitalize on rising electricity prices. Its portfolio includes a mix of nuclear, natural gas, and coal power, with nuclear making up 16% of its total capacity. This strategic mix positions Vistra perfectly to meet the surging power needs of AI-driven data centers while maintaining reliability and profitability. The company's financials are equally impressive. In the third quarter of 2024, Vistra reported $1.4 billion in adjusted EBITDA, and it expects to generate up to $6.1 billion in EBITDA by 2025. What's more, the company's free cash flow has enabled aggressive share buybacks, reducing its outstanding shares by 27% over the past 3 years. Now, looking at the table, it's fascinating to see the diversity across these energy-focused companies. Energy Fuels, despite its smaller market cap of $1 billion, reflects a promising revenue of $37.93 million, albeit with a negative EPS of negative 0.21 cents, which could indicate a growth phase with potential future earnings. Talon Energy, on the other hand, stands out with a robust gross margin of 56.26% and an impressive EPS of $18.68, suggesting strong operational efficiency. Meanwhile, Vistra Corporation leads with the largest market cap at $57 billion and significant revenue of $15.54 billion. However, its gross margin of 28.24% indicates room for improvement in profitability. These figures paint a vivid picture of the competitive landscape, showcasing varied strengths and opportunities within the energy sector. What's your take on these insights? Which of these companies do you think holds the most promise for long-term growth? As we wrap up, here's a final question. If you could invest in just one sector for the next decade, would it be AI, energy, or something else entirely? Let us know your take in the comments below. Before you go, don't forget to like this video and subscribe to Simple Investing Secrets for more insights into the world of stocks, the stock market, and financial tools to grow your wealth. Remember, this video is for informational purposes only and does not constitute financial advice.